All right. The next video is on stochastics. Stochastics is a turning indicator, much like the RSI. Okay, and let's use another ticker here. Let's use Bitcoin just to change it a little bit. Okay, so you add stochastics. Again, you're not using anything different. So here you are, right? It basically tells you again. Remember it looks eerily similar to the relative strength index, right? But some people will use it because they think that it's much more accurate because you're using a couple of exponential moving averages to tell you exactly where you are in terms of overbought, or oversold, right? And then what the stochastics has done is actually use 20 and 80 instead of 30 and 70, right? RSI uses 70 and 30, so that's where the trading has been, 70% and 30% of trading. And then this one is actually extends that boundary a little bit more to 20 and 80 to capture a little bit more of the move. But just like again, it's because it's a lagging indicator, you got to be careful. So the technique is basically when the blue line comes down. So if you are using a trading platform that's different, when there's a line that goes below, that's a short, you sell. And when there's a line that goes above, that's a long. That's simple. And ideally, if you do that, above the 80 line or below the 20 horizontal line, that gives you the best chance to make as much money because you're basically using a turning point where it's a temporary top or bottom. That is how you use it. Okay, it's nothing difficult, nothing complicated about the stochastics. So you can see now there's a lot of it that's not going to work. So let's go with a different ticker. Let's go with Amazon. So Amazon stock. So we'll just use today's, July 21st's trading day. Okay. The indicator tells you, okay, it's time to buy, it's time to short, but this is before market open. So if you were never aware before, you can trade before the market opens. Let's just remove that in case you didn't know that. Let's just go with normal times. So normal times, 9:30. So before that, it was already telling you to short the day before. And there you go. Now, the indicator tells you here to go long at 31.37. This guy went as low as 31.10. If you're a day trader, that's a $20 move, actually $25 move. You might get stopped out depending on how good or bad you are. So that now you can see, right, that these indicators, when they work, they could either be too early or too late. It's never going to be perfect in spotting the 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 exact turning point, or at least as close as exact as you can possibly get. Okay, so it's important that you know that when you're trading, right? So you get the signal here, you had to wait, but when you get another signal here, it's a little bit better, right? So that there is the number one thing you have to be extremely aware of, right? With any indicator out there. It doesn't matter if you're using indicators that are being mentioned in these set of videos, or you're going to be using, all the rest. Okay? Same with what's happening here, right? So that's why you got to be careful when you're using these indicators. Like this is a very big dangerous variance here, right? It tells you to go long. You may have been right for like a few, but the trend was just completely bad. It obliterates you, right? That there is a bad setup. Same with this one here. Tells you to short, barely even went down, and the next thing you knew, it was already way too high, $200 more. And away you go, right? So, that's why it's so important that you are aware of the limitations of these indicators because they can really, really hurt you if you don't know what the limitations are and if you don't know how to use them properly.